So this video is sponsored by Bityard, a crypto exchange with 9 out of 10 stars by the Coin Bureau guy, 400 cryptos to choose from their spot exchange, derivatives that include commodities, forex and traditional markets, as well as inverse perpetual coin futures, USDT perpetual futures and leveraged tokens. You can even set up a copy trading account so people can copy your trades, you earn commission on those trades, or you can follow other traders who have better results than you. Set an account up with a link in the description and get mystery box bonuses for completing random tasks. Bityard. Hello everybody, welcome back. Let's have a quick video, try and make it as quick as possible. A lot to get through as we are on the eve of the CPI report coming out in about 2 hours or so. So yeah, let's have a look at the Nasdaq to start with. Pretty much nothing to look at here. It's basically a carbon copy of Bitcoin. So hitting the 200 exponential, bang, 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 and down. And if we go to Bitcoin, take it to a 4 hourly, which again, will show flat as a bloody pancake for the whole week that I was away and still now. And then hitting the 200 exponential, bang, bang, bang. More or less a carbon copy for of the Nasdaq, and the reason why is that everything's so tied down now to traditional markets and the economic reality of what's to come. And this CPI data is going to shed a little light onto where it actually is and what it actually means right now. But for the moment, we're all basically watching and waiting. Now, I think that inflation will have peaked last month. It might not have peaked by much, but it will have potentially peaked. Now, obviously, we all know that oil and gas prices are going up still, so that's going to add to higher inflation. It's all part of the overall figure. Yeah, we did go through a decent rate hike last month, and they are doing quantitative tightening. They've got a few more tricks up their sleeve, and the markets are likely to price that in. But it looks to me like the best part of the Fed's duties at this stage is to effectively cause a recession. It does feel like that. So we've not really got much to talk about as far as price action on the short term. Long term, we've got a few things that we can think about. So it would appear still that obviously the dollar is rampaging. We'll have a look at the Dixie real quick. We did have a little peak. That's fine. But as far as this chart is concerned now, it's just going from strength to strength. We hit our 10 exponential, and this is a weekly chart here, and found ourselves launching from there. This is a bullish chart on the weekly, by the way. Very bullish. Everything about it is very bullish, and continuing with its strength. Exactly as predicted last September, by the way. Let's have a look at this on the daily. So the daily had its conversion baseline cross where we had a continuation of a trend which came to an end around this area. So we kind of felt like that was the case. Hit that, came down to the 50 exponential, exactly as predicted. And now it would appear that next week, if we continue with this kind of price trajectory, we're going to get another conversion baseline Ichimoku cloud signal suggesting a continuation of a trend. So the last time we got that, we can measure the size of the move, and again, this tells you when to get in, also tells you where to get out. We actually got a 5% move from that. So if we were to think, if we would get something similar, again, this is not the way to do it, but it would be a trend until the trend has ended type vibe. If it pushes us up to this major level of resistance here, about just bordering 107, we're talking 3%, probably get a little more than that. If we just go over to our monthly and see what sort of areas that ties into, obviously I've clearly looked at this in the past with all this madness around here. What the hell have I been drawing here? We can see that is just an intermediate area. The next level really is all the way up 120. Now that is an extreme read. An absolutely extreme read. It may not happen, but with a chart like this, with all indicators pointing up on all time frames, we can't rule it out, obviously, and that's going to be bad for Bitcoin. So let's have a quick look at Bitcoin as well, or first of all on Bitstamp's chart, because I am anticipating a low form potentially around that 22,000, right? So that's Bitcoin on your monthly. We've got a 50 simple moving average around here, and the bottom of the Bollinger Band just short of 22,000. We move it to a weekly. This is the important thing to focus on. I've talked about it in the past quite a few times. There's your 200 simple moving average on the weekly. Last time we found ourselves in a bear market, 200 simple moving average is where we got support on, and then previous bear market to that, 200 simple moving average got supported on as well. So that comes in at around 22,500, give or take. And also, if we just go back to Binance's chart, we can see that on the daily, so on the weekly, we do have a very similar read to printing the next bottom. On the money flow index, this is what we've been talking about. So here we go, we've got our low formed here, and then a higher low formed here. That's your divergence that hit exactly on the low. got a low formed here and a high low formed here, printing the exact low that was formed in the crash. So we've got a low form here, very, very pronounced low, and a low forming here. This is, like I say, because it's such a pronounced low, we can get divergence for plenty of places, which means lower prices, which basically would suggest that if we do have a big fat turnaround or bottom anywhere, historically we've done it 2 bear markets in a row on the 200 simple moving average. We've also got the divergence in play, which we've had in the last 2 reads over here to suggest that this is where the bottoms were printed, and we've got that money flow index divergence, which has been a pretty handy tool if you think back testing it here, catching the absolute low on that divergence. Now we can anticipate the absolute low being tagged at the same time as basically a historical moving average on a weekly being tagged. So it's all about the weekly, and the weekly points to this level here. Whether that happens this week, next month, the month after that, or some point this year, it would appear to me that the general trajectory, unless of course inflation figures come out extremely favourable and the Fed go, hey, party's on again, we can relax, everything's cool, which I don't think is going to happen. It looks like they're doing the worst of both worlds. You know what I mean? They're wrecking the economy, causing like a recession, basically slowing growth at the same time as basically letting inflation effectively come down at a snail's pace. You could have just gone straight in on it, basically allow the economy to crash and collapse with a V-shaped recovery. You know, I wouldn't want to be in their boots, to be honest with you, but it would appear that they can't even choose one direction. They're basically destroying both sides at the moment, and that's no good. That's no good. But we've got our eyes on the prize, like I say. If you're dollar cost averaging from 30,000 down, that's cool. If you're waiting for the low to come in around 22,000, that's cool as well. There's no point in rushing into anything when obviously I'm staring at everything here on a weekly. I am planning to do bot trades with altcoin to altcoins. I'm still not yet moved in on that. I've got my KuCoin account set up with Bitsgap with my $1,000 in there. I've not bought any altcoins as yet, because obviously with a situation like this and on a day like today, you want to see what at least takes place as a result of that. And if I can get some lower prices, then that's what I'm going to do. I'm not going to be beating around the bush trying to get in on altcoins. I want to increase that $1,000 at the preferably sooner rather than later. So I don't really want to be taking any opportunities or forcing any opportunities at this very moment in time. Maybe next week will be a bit of a better scenario as we can let the dust settle, whether it be for good or for the bad. Now, if you were to put a gun to my head and ask me which way it's going to go today, this is what I think is going to happen for Bitcoin. I think that inflation data is going to show that it's actually okay and it's not as bad as everybody's anticipating. But it's still obviously not a good scenario. So what I would be expecting, and again, you know, I'm not willing to trade on this. I've got a birthday party to attend later on this afternoon, so I really would only get about half an hour's worth of price action before I'd even have to start, you know, monitoring a bouncy castle and serving lemonade and things like that. But what I'd be looking for would be, first of all, a move up, a pump up, maybe even into the 32,000s, 200, sorry, the 50 exponential off the back of the favourable inflation data. So showing that inflation has peaked. Markets have a pump, but it would be short-lived, because reality is, with charts that look like this, TA trumps all. You can't deny the fact that inflation is still going to be high, most likely running above 7. And that is no place to be, because we know what's going to continue to happen, which is the same as what's been going on. Quantitative tightening, raising of rates, and all the other stuff that goes along with that, with most likely increased oil prices as well, and a strong dollar. So we'll get a pump, and then we'll get a sell-off, and then we'll come back down into the range, and then over time likely break down maybe next month or the month after. That doesn't mean, of course, that we don't get the alt season that I'm talking about. The alt season being the Bitcoin dominance chart, being at around 48% dominance. It is a bit of an intermediate area, but I would be looking for that to have an effect on altcoins. But still, for the best part of things, altcoins aren't really a place to be. They're not a thing to really trade at the moment, and it would be worth thinking about making some alterations to your portfolio in favour of alts as we get up to and above that 48% dominance, but it would only be for a small trade. Anyway, I'm going to leave with you there. I've got birthday cakes to prepare and party bags to fill. But other than that, good luck with the CPI report. Don't get too crazy. Looking for a pump into a dump, and then basically back to this range that we've been in this entire time, and probably for a little longer. Take it easy, guys. Have a good weekend.